Hello and welcome to the day ahead. It is the 14th of July. I'm Nadine Blaney. Well, investors digested a report showing U.S. annual consumer prices jumped more than 9% in June, the largest increase in more than 4 decades. So stocks closed modestly lower as investors digested that hotter than expected U.S. inflation read. They did, though. The U.S. equity indices bounce off lows reached earlier in the day and occasionally edged into positive territory, but again, all red by the closing bell. Delta Airlines slid 4.5% after its second quarter earnings missed expectations. The dollar was firmer on other peers earlier in the session, but the index against major rivals has fallen. U.S. crude prices added 46 U.S. cents, or up 0.5%. Bitcoin firmed, but was still below that 20,000 mark. More on that at U.S. inflation read. It did shock overnight as the latest numbers revealed soaring price pressures in the United States. Headline CPI jumped 9.1%, with annualized core CPI coming in above estimates at 5.9%. Atlanta Fed President Raphael Bostic delivered a speech after the release saying everything's in play when it comes to the size of the Fed's next rate hike. Meanwhile, in Canada, the Bank of Canada surprised the market by hiking its key interest rate by 100 basis points. Markets had been pricing in a 75-point move, with BOC Governor Tiff Macklem justifying the unusual move on an overheating Canadian economy. Locally today, big data is coming. That's jobs. June data is expecting to show a slowing in employment growth to 15,000, with unemployment falling to 3.8%. That would be the lowest level since August 1974.
We're looking for about 15,000 increase in employment, which sounds very low given that we've had very high employment growth over the past few months, but still it would still keep annual employment growth pretty very solid. Close to 3% on an annual basis. We expect the unemployment rate will come down as well to 3.8%, so another not record low, but the lowest level that it's been at for about 50 years, or 48 years more precisely. So still good signs that employment growth is solid and that the labour market is tight, but I do think that we will start to get some slowing in jobs growth from here.
Now today, the local market is expected to open weaker, down 4 points to 6,515. Let's call it a flat start to the session. Yesterday, it was cautious moves. Investors unwilling to move too far in either direction with so many risk events ahead. Now, most sectors eked out modest gains, led by communications, tech, and industrials. Those were offset by moves in materials and energy, which continued to underperform on mounting global recession fears. Today in equities, Auckland International Airport releases its monthly traffic update. Visitors to New Zealand have been improving, and in the U.S. tonight, JP Morgan and Morgan Stanley issue earnings results. Also, Telstra today just confirming that it has completed its Digitel Pacific acquisition in partnership with the Australian government. That does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.